Hello, this is Ian Henry. Welcome to the March 2012 edition of the European Car and Light Commercial Vehicle Production Outlook. A quick look at the economic situation. Well, the Eurozone crisis remains unresolved, although the situation is somewhat calmer than it has been in recent times. In the UK, economic growth is still slow, there are limited signs of revival, and there's little evidence that the latest round of quantitative easing by the Bank of England has had much effect. But the auto industry does show some signs of bucking the trend, as we will see. The brick markets are still growing, underpinning demand for European premium vehicles in particular. The political situation in North Africa and the Middle East has stabilised. We do have concerns though about whether Iran will disrupt oil supplies in the long term. Looking at the production numbers, well, in 2011 we saw 19.4 million cars and LCVs produced in Europe. This was a 7% rise on the 2010 level of 18.2 million. This demand rise was driven by strong demand for German premium brands, better than expected performance from the Japanese and Hyundai Kia, and the strength of the LCV market. We now have a reduced projection for 2012 compared to our last outlook. We now see this is about 19.9 million for 2012. It's still close to the 2007 pre-recession peak, however. Growth this year will be driven mainly by Russia, the UK, Czech and Slovakia, and also, surprisingly somewhat, France and Italy, subject to new model launches going well. We see the UK heading towards 2 million units a year by 2015-16, possibly even higher thereafter. Much depends, of course, on the success of Jaguar Land Rover and Nissan. In 2012, we actually see some fall in production in Germany, in Spain and Belgium. Despite the economic uncertainty, opportunities do exist in the auto sector. We will see increasing exports from Europe, strong demand for premium brands and strong new model programs in many cases. Demand from China, Russia, Brazil and other emerging markets is certainly not slowing. And there's also a rising sale of small cars, EVs and hybrids, and increased production in Russia, of course. The other issue is that we are now seeing a new round of plant closures, I think. GM Antwerp, Fiat Sicily and Saab have already gone. Mitsubishi Holland will stop at the end of 2012. The question is, who will be next? The UK saw significant investment in new projects in the auto industry in 2011, and 2012 has started in the same vein. Nissan confirmed at the Geneva Motor Show that it would add production of a new B-segment car, currently called the Invitation, to the Sunderland factory from 2013, and Jaguar Land Rover is moving to 24-hour production at Hillwood, adding over 1,000 new jobs to increase production of the Range Rover Evoque and the Freelander. And last year, as we noted before, there have been major new investments confirmed by BMW, Nissan, Honda, Toyota, Aston Martin and others. BMW and Daimler, while they are both increasing production in the US and China, they want to reduce dependence on Germany. BMW achieved record global sales in 2011, up 14% to nearly 1.7 million. In 2016, 4 years ahead of its original 2020 schedule. It's on target too to achieve an EBIT of up to 10%, which will of course be the envy of many other VMs. Production capacity at BMW is expanding outside Germany, a wider model range is going to be made in the US, and new shifts have been put in place in South Africa, and a CKD plant will be built in Brazil. Daimler also reported record global sales, up nearly 8% at 1.36 million, with strong growth in NAFTA and Asia Pacific. And sales growth continued at Daimler in the early months of 2012. They were up 20% in February year-on-year and up 13% year-to-date. The volume manufacturers, Fiat, Ford and GM, well, they all need new models to boost their faltering prospects. Fiat, of course, has raised its stake in Chrysler to 58%, and it has a new model program underway now. The Panda is Poland. There have been some reports too that Fiat would close 2 of its plants in Pomigliano and Mirafiori, but these have been denied. Also, its ambitious shared model programs with Jeep and Ram are underway, including vehicles made in Italy, Serbia and Turkey for export back to the States. And Fiat has also secured financial backing for its new Russian plant, which will be 20% owned by Sberbank. Ford has severe losses in Europe in 2011 and is going to lose a lot of money in 2012 as well, we understand. It's cutting production in Germany and Spain. These cuts were announced first in 2011, but further cutbacks have been announced already this year. 2012 will of course also see the previously announced reorganisation of its European production footprint in action, with several models moving to Spain, new model going into production in Romania, and a new small LCV into Turkey. At GM, while 2012 has started out with big news, it's going to form a joint venture with PSA in purchasing and model development programs, and GM is also going to take a 7% stake in PSA. Further restructuring of GM Europe is very likely, and the pressure to cut fixed costs and capacity is mounting at GM. This could of course lead to another plant being closed. Honda and Hyundai Kia. Honda started production of the new 5-door hatchback Civic in late 2011, and Swindon is going to be the sole global production location for this model. The new CR-V goes in production later this year. We're still waiting for confirmation regarding the future of the next Jazz, but hopefully it will be retained for Swindon, especially as Honda has said this year that it is expecting to supply 80% or more of its European demand from the UK factory by 2014. Hyundai Kia has shown a remarkable growth in recent years, and we expect it to be making nearly 1 million units a year in Europe by 2016, possibly even more. A new model will be added to Turkey. There's 3-shift production taking place in the Czech Republic already, and the Russian factory is underway with full production and rising exports to the rest of the Russian region. Incidentally, the Hyundai Kia group as a whole is doing very well. Both brands reported profits up over 35% last year. PSA and Renault. Both companies had strong financial performances in 2010, but 2011 was less successful. PSA is likely to show a loss for the second half of last year. PSA has also formed its alliance with General Motors to boost purchasing scale and allow it access to alternative platforms. There are questions once again about the future of the Aulnay factory in Paris, particularly post-2014, and concerns have also been raised whether Madrid or Mangualde in Portugal could also be considered for closure. PSA has also begun to refocus its business away from Europe. Production will take place in India within 2 years, and China will soon be its largest market. Renault is also refocusing its business away from its core European areas, towards Brazil and Russia in particular. It's taking management control of Avtovaz. This should happen by March, but there's also a range of purpose-designed electric vehicles. At the Geneva Motor Show it launched the Twizy and the Zoe. Nissan, part of the Renault group, recorded record UK production both last year and in 2010, and it's made major commitments to the UK with the Qashqai and the new Nissan Invitation to be added to production from 2013. We think this will push production at Nissan close to 600,000 units a year. And finally at Dacia, while production remains very strong in Romania, it's growing fast in Russia too, and European demand for Dacias has led Renault to decide to allocate a new factory in Morocco, initially just to Dacia. Tata JLR and Toyota. Well, 2012 has started with more good news from Tata JLR, with further investment confirmed for Halewood, 1,000 new jobs, 24-hour production, and increasing production of the Evoque and the Freelander. Construction of the company's new engine plant is also underway, and JLR seeks to eliminate its engine dependency on Ford. Toyota, well, it was the hardest hit of all the Japanese vehicle manufacturers by the earthquake and tsunami last year, but its own European plants are now back to normal production. Valenciennes in France is on 3-shift working, and this has been boosted with concentrate in the UK, and the UK plant too has been boosted by the award of a contract to export the Avensis back to Japan. One problem for Toyota is the production cut which is taking place this year at its PSA factory, PSA joint venture factory. It will also expand its Russian facilities, and Toyota Europe is going to take the lead in the global development of all new B and C segment cars for Toyota as a whole. The Volkswagen Group, well, it continues to lead the charge for Europe. It reported record global sales in 2011 of over 8.3 million vehicles, which was up over 15%. Revenue was up 25%, operating profit was up 58%, and it doubled pre-tax profits. At Audi, operating profit was up even more at 60%. This was due to very strong sales, the A6, the A7, the A8, and the Q7 in particular. Like many other VMs, however, Volkswagen grew fastest outside Europe, with Asia Pacific growing 20%, China 17%, and India by more than 100%. Even NAFTA grew by 21%. And growth was apparent at all its brands, not just VW, Audi and Skoda, but also even Seat, which managed a 3% rise. All the brands are introducing a much wider product range. For example, Audi is going to have a very complete range of Q models. Skoda is going to introduce the Retta this year, and Volkswagen has introduced the Up, which will come in many different guises. The company is undertaking heavy investment at its European plants, with over 60 billion euros due to be invested by 2016, and a further 10 billion to be invested in its China JVs by the same date. A large amount of technology is aiming for a 15% fuel efficiency improvement across the range, and indeed a 25% improvement in the environmental impact of the production process at Volkswagen. Two other things to note. One is that the cross-shareholding with Suzuki is coming to a somewhat undignified end following the corporate fallout, and the merger with Porsche is still problematic, and we understand this could be simply replaced by a takeover of the manufacturing operations. In conclusion, while our outlook still assumes no double-dip recession, and while there is a lot of economic uncertainty, and indeed some signs that the economy is going into a bit of a recession in certain countries, the auto sector appears to be holding up reasonably well. Production growth occurred in 2011, and we still see production growth in 2012, although a large part of it will be from Russia. We will see some slowdown, as we've noticed, in production at Ford, Opel, and there'll be some model changeover disruption in Germany as a whole. We also see signs that the excess capacity issue is now finally being addressed. Saab has closed, Mitsubishi Holland will stop production by the end of 2012, and we wonder whether PSA will, in the end, need to close one of its factories. Even GM is looking at closing another plant in Europe. Even so, 2012 will see a number of new plants coming into full production, for example Fiat Serbia, Ford Craiova, and Mercedes Hungary. Russia, as we note, will be the main focus for European. Ford, Fiat, GM, Hyundai and Volkswagen will all help these VMs produce nearly 2.5 million cars in Russia by 2016, and that could well be an underestimate. Even so, we still see production growth by 2016 over 2012 occurring in the UK and Germany, both of which have the potential to add more than 500,000 vehicles to their production output. Italy could, if all goes well, add as many as 400,000, and Czech, Morocco, Serbia will add around 300,000 each, while Hungary and Slovakia will each add 200,000 more by 2016. So, despite all the economic uncertainty, there's plenty happening in the auto sector amongst the vehicle companies, and plenty of potential in the industry for suppliers throughout the supply chain for both established and all new technologies. Thank you very much for listening. We hope you found it interesting and informative. Access to the full report is now available for SMMT members by downloading it from the website, the details of which are on the screen. See you next time.